Hello traders, Cousin Vinny coming to you from theclosingprint.com on July 28th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher with the Nasdaq and the small caps outperforming. International indices, the London Stock Exchange, the FTSE was lower, Nikkei was a bit higher, and we had the Hang Seng and the Bombay Stock Exchange lower. Note the Bombay is showing 3 black crows on the weekly. That could be leading to more downside if you're trading any stocks on that exchange or exchange traded funds. Be aware of it. The FANG stocks moved higher with a huge beat on Google, closing higher at 10.05% for the week. The Nvidia moved higher by more than 4%, and Microsoft almost finished off plus 3.5%. Intel is also looking good with Tesla dropping on earnings. Most of our indicators are bullish in the short term and intermediate term, as is the bond stock ratio, high yield and junk bonds, Dow Composite, and the S&P 1500, which remains on a strong buy signal. All three of its components, the S&P 500, S&P Mid Cap 400, S&P Small Cap 600, all three advanced decline percent is rising at all-time highs and above its bullish moving average. Put call ratio is showing traders with bullish bets. The VIX at 12.16, short term still bullish for equities, and VIX VXV was at extremes at 0.82%. Bullish percent is in the median around 57%, has plenty of room to move to the upside without getting exhausted. Currencies, US dollar is bullish. That's a headwind for equities and for commodities as well. We had a rebalancing that started about 4 weeks ago, as we eased into the second half and the third quarter. We've been alerting you to that fact. If we see bonds start to trail off and the yields start to rise rapidly, we'll scale out of more of our AGG and TLT bond positions. Gold, copper, and crude oil are all slightly lower as the dollar moves higher. The heat map is improving, though there is less red. There's still strength in transports, materials, industrials, semiconductors, discretionary, and retail. The heat map for the international markets, there's no change. There's still a lot of red there. We'll look at some IBD 50 names. Note this week, IBD 50, we had 40 of them close green, 10 were red. That's the exact opposite of what we saw last week with 40 red and 10 green. So we'll see how these stocks trade this week. We're also looking at some Market Smith Growth 250 names. The yellow shows names that showed up on our TTM squeeze scan. Those are on our watch list, and we have a ton of stocks that are breaking above the previous highs of the day, continues to show bullish strength. All of those are listed here. We have Bukowski with 3 of 5 red, with his CPI signal green since July the 19th, moving from 33.3% in the previous week to 78.1% this week, which is bullish, with 7 bearish patterns, 25 bullish patterns, and 229 patterns waiting for a breakout. Bottom line, we are cautiously bullish this week after closing at all-time highs on Friday. We'll start with the Nasdaq Weekly, which outperformed all of the other U.S. indices this past week. Tech stocks pushing the index to highs. We have a ascending wedge pattern. If the market does pull back at some point, 382 would bring us back inside of this price action, though RSI suggests a follow-through. Since the May lows here, we had 3 weeks up, we took a respite for a week, 2 weeks up, took a respite. So the odds are at least another week of higher highs. The moving averages are all climbing. MACD is above its signal line and volume is increasing. The bulls are in control and would take at least a week or so for this index to roll over, giving us plenty of time to get out of the way if tech stocks start to fade towards the end of July, the seasonally strongest month of the year for tech. The same can be said for the Russell 2000 ETF IWM. We have this trend line overhead that we were looking for a breakout. Perhaps it comes this week as RSI is rising above 50. We have a triangle pattern. We are bullish. We have a position in IWM, so we'd rather see a bullish breakout that takes out the 158 and the 160.50 level, which could point to risk on and an attempt at the 171.29 all-time highs. We had above average volume last week, beating out the previous 3 weeks, and MACD is above its signal line and rising. Bulls are in control on the weekly time frame. The S&P 1500, 500 big caps, 400 mid caps, 600 small caps is on a buy signal. The green line still rising above the moving average. No hint of flattening going into this week. We retested the 20-day moving average 2 weeks ago. We followed through last week. Note Bollinger Bands are tightening, indicating volatility is about to expand at some point in the short term. Looking at the S&P 1500 a little closer, this is the S&P 500 in the top panel, and the 3 lower panels are the cumulative small cap, mid cap, and large cap advanced decline percent. This is one of the best measures that I know of to key in on breadth in the markets versus the New York Stock Exchange advanced decline, as the New York Stock Exchange has over 700 non-stock listings such as funds, preferreds, and trusts. So it's a more accurate method for measuring breadth, all of which closed at all-time highs, with the S&P 500 slightly lagging the Nasdaq and the Russell this week for performance. All things considered, however, the New York Stock Exchange does represent a good benchmark to follow. New highs minus new lows remains above the zero line. The moving average is climbing, as we can see. And we peaked above Wednesday's recent highs with an improvement of 125% over Thursday's new highs, new lows, as price action on the New York Stock Exchange is about to test this previous high, and the New York Stock Exchange advanced decline, despite its flaws, pushing higher as well. The Dow Composite also finished above its moving averages, still above major support. RSI's above 50. Price action faded slightly, so did RSI, so there's no divergence there. And MACD is crossing and starting to move a bit lower. We did see a little bit of late fading on the airlines. We want to continue to see higher highs and higher lows with trucking, rails, and shippers, and transports in general, in order for this index, composed of 65 stocks from the industrials, transports, and utilities group, to continue to move higher. That would be bullish for equities. If we start to fade and move back towards the breakout zone, which is another possibility this week for all of the indices, so that's something that we need to keep an eye on, and venturing cautiously into the last week of July, with August being historically one of the worst months of the year for U.S. equities. As we can see, going back 10 years to 2009 when this bull market started. The same can be said for the Nasdaq going back 10 years, with a peak in July, as we pointed to back in June. Technology tends to outperform in July and then taper off into August and September. This 60-minute chart of the VIX inverted which gives us a good buy-sell indication on the 60-minute time frame. Remains bullish for equities short term as long as this stays green, which suggests that fear is vacant the market at the present time. Most investors and traders are anticipating the Fed will announce that it's cutting rates this Wednesday. They know most likely what the nonfarm payrolls report will bring on Friday. So depending on what the Fed says on Wednesday could have a big impact on the markets in the short term, while most assume it's going to be a quarter point rate cut on Wednesday. The bond stock ratio in the lower panel compares the 10-year UST to the S&P 500. When this is dropping, that's bullish for the markets. The moving average, you can see the 65 period is starting to dip again, showing the potential after a 10-month sideways consolidation in the bond stock ratio. It looks like equities are going to continue to outperform. And if you watched Chris Shavako's weekend video, I thought it was pretty telling, his analysis of the last time we had a bullish cross between the center of the Bollinger Bands and moved higher was back in late 2016. We hit the upper bands back in 2018 and started moving lower. And if you look at the current time frame, you can see it's closer to what we had back in 2016. Across through the moving averages, yet to be seen, but certainly bullish if it continues higher for equities. As a result of the waning of interest to trade bonds at these extended levels from the October low up to recent highs, AGG does look like it could continue higher. We did take some off 3 weeks ago. We're down to 46% in our portfolio. As hedge funds rebalance their portfolios in the second half of the year, we'd look for this to continue. Same thing can be said for TLT, which is at resistance and most likely will continue to hold in this area. A breakout higher we'd keep an eye on as well going into the fall. With the backdrop in junk bonds and high yield corporate debt continuing to suggest a follow-through, RSIs above 50 on this daily time frame. Red is the IWM. We're looking for a follow-through there. IBB, we'd like to see that turn up. And USO, of course. If these three can continue to move higher along with junk bonds, that would be a risk on, suggesting higher levels for the equity markets in the short term, with the Fed rate cut potentially coming out on Wednesday. The British pound US dollar pair continues to move lower as the new Prime Minister set out cabinet ministers for interviews across newspapers and broadcasts this weekend as part of a publicity blitz about the prospects of a no-deal Brexit. Preparations to leave the EU without a deal on the 31st of October is playing on the minds of investors, especially in Europe. So keep an eye on the British pound US dollar and the FTSE. And as that pair continues to move lower, of course, the US dollar is outperforming the pound. Coming back, looks like it's going to retest the highs up north of 98, which is a headwind for equities. Keep an eye on the US dollar. That'll also affect commodities like copper, which moved a little bit lower last week. Keep in mind, copper could be affected by a Fed rate cut, as that would target home builders and construction, which uses a lot of copper in the building industry. If this turns back up, that would bode well for the equity bulls, while a strong dollar has helped push gold a bit lower. If the dollar continues to test that 98.25 zone, watch for gold to pull back, possibly to the rising 50-period moving average. If it loses this volume by price band, you have a reverse curvy back to these levels of support where it broke out back in June. The same goes for crude oil, which has spent the last 2 weeks below its 20-period moving average on the weekly time frame. Of course, there's more issues than just the dollar strength. You also have the Middle East and supply-demand issues as well. Spider's sectors are in good shape. We can see materials pull back to the 20 period. Looks like that's going to bounce. Communications, of course, doing well thanks to Disney and Netflix, Comcast, and other communications group names that moved higher. Energy pulled back to the 50-day. We're watching for strength in crude, as we just talked about. Financials continue to break higher. Looks like banks are being favored. Keep an eye on your favorites. Industrials flagging just above the 20-day. 20 is above the 50. Technology continues to perform. Staples are moving higher. Utilities pull back to the 50-day. Healthcare is below the 20, tested the 50-day. And of course, consumer discretionary. If you are bullish the economy, you want to see consumer discretionary and retail continuing to outperform. It tested the moving average last week. 20 period still rising, looking for follow through. Overall, the sectors look strong. And if you look at the 50 Innovator IBD 50 fund, of course, that's bullish and rising. Here is the IBD 50 for the week. What we're looking for is price above the 20 with the 20 above the 50. Price having tested the 20 period in recent days, preferably bouncing on Thursday, following through on Friday so that we have a nice setup going into this week. As we can see with Air Lease testing the 20 period on Friday, looking for a follow through on this bullish trend. Price above the 20-day, RSI above 50. For starters, we'd want to see a bullish day on Monday, more than likely taking out the highs in the process. CDW, computer, hardware, tech, security, testing the 20 period for a week, finally pushing off, gapping up on Friday. Chipotle, I haven't seen this on the IBD 50 in ages. It was at the 20-day on Tuesday, gapped up on earnings Wednesday, followed through 2 dojis Thursday and Friday. We're looking for a follow through there. Comcast, CMCSA, along with Disney and Netflix, communication sector looking bullish, testing the 20 period, 20 is above the 50, looking for a follow through on many of these stocks in that group. Financials, the credit card processing group, as well as banks, all look good. This is Discover Financial. Breakout on earnings flag. Looks like it's going to continue to follow through. I'm not interested in chasing it. Looking for a flag. Get the short-term moving averages to catch up. Most likely won't cater to our needs and will continue to move higher. That's an indication that institutions are buying the gap and go and filling positions, which typically takes days and weeks to complete. So you could see Discover Financial moving higher along with any gap and go for that matter, like Edwards Life Sciences. Discovery Networks, also in the XLC group, looking for this to hold a 20-day and follow through. EPAM coming back, didn't come back to the 20-day, but following through as well. FFIN, First National Bank, another financial looking good. Genpack, Glob, both looking good, following through with GLOB, Globant, testing the 20-day and pushing higher last week. Hexcel from previous watch lists, consolidating after the gap up on earnings last week. Jabil Circuits, looks like that could continue higher this week as it pushes up the 20-day and RSI is above 50. Depending on what happens with gold and the US dollar, if the dollar does come back in, we could see gold stocks moving higher. Kirkland Lake Gold succumbing to a little bit of selling pressure in a very bullish trend. If this holds the 20 period this week, look for RSI to turn back up and volume to increase. Monster Beverage looking very promising after Coca-Cola took off last week as well. Monster is looking good. Sort of a flattening sideways pattern just below highs. We've got about a quadruple spread, quadruple top that could be taken out this week if we see strength. Look for RSI to continue higher. A follow-through day on Monday would be a starter. Use your trade of the day set up for entries, exits, and stops, and then follow through on a swing basis if this does take out these pivots just overhead at 66.85, 66.08, short-term targets overhead, and then look for a follow-through. Looks like a big cup and an elongated handle with a little bit of volatility here. Looking for a follow-through this week. PAGS, PagSegura, continues to follow through. Watching Paycom and PayPal, the latter sitting on the 50-day moving average. Pretty high volume on Thursday. Planet Fitness, 3 white soldiers, continuing to push higher. Flat sideways price action. Most likely gets to 82 and gets rejected again. If it doesn't, that could be leading to a breakout in the short term. RSI is above 50 and rising. We're watching Qualsys, RealPage, and SSNC as well. Repligen continues to push higher. Looking for a follow-through on bullish action on Monday and Tuesday, potentially. Synchrony continues to push higher. Went shopping at TJ Maxx this weekend. Marshalls. Also, the credit cards for those two companies, as well as many others, cleared through Synchrony Financial. I believe Mr. Buffett owns this one. Nice little grinding pattern to the upside. Just wanted to point that out. As it's flagging, RSI is above 50 and rising. Tempur-Pedic, TPX, a new name on the IBD 50, came down Monday and Tuesday, tested it Tuesday and Wednesday, followed through Thursday, and breakout Thursday, Friday. Trade Desk, of course, news that it's doing some advertising deals with Amazon. That could lead to a move to 300. I wouldn't chase it up here, maybe a pullback for an entry. Ulta holding up well. OLED looks like that's going to continue to climb. Upland Software showing signs that it could break higher. Nice bullish move on Thursday and Friday. RSI back above 50. And looking for software stocks to continue to perform, as we saw with Microsoft last week, which was a very nice trade on the 140 calls. I'm completely out of those. I'm looking to get back in Microsoft and Roku as well. Both of these stocks showing lots of investor interest as they press higher, with 113.77 as a first target. Viva System, looking for this one to continue higher as well. RSI is above 50. Look for a bullish candle on Monday and volume to continue, as we saw on Wednesday last week. Like Synchrony, MasterCard, Visa, nice trends, just continues to push higher. There were 4 stocks on the relative strength blue dot scan. From my perspective, Diebold was 1. Manufacturing, banking, transaction systems, ATMs, vaults, and depositories, electronic security products. Relative strength hitting 99. When stocks show up on this scan, it means that relative strength is at its highest level during that time period, and the stock is about to or just about breaking out, which we can see here is in the blue zone. That is the buy zone using IBD MarketSmith terminology. Luckin Coffee also showed up on the list. It was number 8 this week. We, of course, saw that test of 25, looking for the IPO highs to be taken out. That's a buy zone. Look for Luckin Coffee to continue higher if you see volume increasing this week. Sprint was also on the list. Note the increase in volume going into earnings on Tuesday. Additionally, we saw Twitter. We took profits on the gap up on Friday, taking some of those profits and rolling them up and out to the 43s. Highest volume we've seen since April, with a nice beat on earnings, 829%. and surprise of 953% for the quarter. Look for institutions to continue adding shares and volume to stay elevated if you're trading Twitter. These stocks at the bottom of the list, starting with Allstate and ending with Zoom, all showed up last week, taking out the previous highs of the day in every case. So make sure you check out those names on the list. All of them look good for follow through. If you're already in some of them, like SQ, a lot of these stocks look really great for the week ahead. ARWR, a bounce. Berkshire Hathaway, General Dynamics, Goldman Sachs, banks, IBM, MasterCard, Kohl's, JB Hunt, and more. NVTA, I believe Susie's in this one, and Roku. All of these look ready to follow through. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for July 28th, 2019. A watch list will be sent out later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Be sure to look for that in your inbox. And remember to start off slow as Monday, Tuesday unfolds with potential rate cut on Wednesday. I hope this helps. Take care, and we'll talk to you soon.